Hello, guys. Just checking if you are hearing me. Hello, Janos. Good afternoon. How is everyone doing today? First day of the week. Has anybody traded anything so far? Any markets that you are currently holding any trades? No one? Okay, let's give another 15, 20 seconds and now we're gonna start. Perfect day, yeah. Nice, nice. Janos, what time frames are you using when you're trading, if may I ask you? 1 hour, that's interesting. Nice. Okay, guys, I will start the webinar right now. Just give me 1 second. So, okay. Let's share the screen. Just to confirm, can everyone see when I'm drawing on the screen? Can you please confirm, guys, that you can see the screen here? Yep, okay, great. Okay, so now we are ready. All right, guys, welcome to this webinar. Today, we're going to talk about the higher time frames and why it is important to use a higher time frame when we are trading. And by say higher time frame, I just simply mean 1 or maximum 2 time frames above the time frame you are taking the trades. Like if you are trading on the 1 hour chart, for example, as Janos mentioned, or on the 4 hour charts, like Dorian said, 1 time frame above that or 2 time frames above that, it's a good indication of what we call a big picture. All right. Now, just as you know, some important information that this webinar is for education and just discussion purposes. Nothing to do with financial advices. Okay, for any financial advisor, just better seek a professional in the financial advising industry. Okay. As for Admirals, we've been around for 2 decades, and now we are going onwards on the 21st year of operation. We hold multiple licenses, you maybe know so far, SIXET, FCA from England, EFSA from Estonia, and ASIC for the Australian market. Okay. When it comes to CFDs, we try to keep as minimal as possible our pips, so it's going to be easier for you. Sorry, our spread, so it's going to be easier for you with less pips to trade as well, your short time frame scalping or your long time frame, whatever it's suitable for you. You can use the MT5 platform and MT4 platform to participate in the market using your Admirals account, of course. And some people, I know that they like to use their applications on their mobile devices. So whatever it's suitable and easier for you, just you go for it. All right. Now, as for myself, the guy you see in front of you in the slide here, okay, my name is Theodorou. Most people, they call me Theo, and that's fine. I'm in the industry for more than 10 years now as a trader, as an investor. Okay, usually when it comes to investing, I prefer some energy sectors and some for long time activity, I can say. Okay, and some automotive and tech stocks, and also the digital currencies. When it comes to trading, I'm more a swing trader at this time of my life. I've been an active day trader for many years. Now, because of the job duties, it's more suitable for my lifestyle to be a swing trader. I hold a master in physics, and if you need anything about investing as well, or you can also ask me anytime you want. Okay, as for today's webinar, we're going to talk about the higher time frames, the importance of the higher time frames, and how by use the higher time frame, it can save us for more losing trades. Or if you prefer, you can use the higher time frame as a good filter for your trading signals to make sure you are going with the momentum in the market. All right. Now, let's get into it. What a time frame represents in the chart. Okay, it's a fairly important question that maybe everyone is going to ask. Okay, Theo, you're talking about time frame, but what actually it's a time frame? What do you mean by the higher time frame? And now, each candle here, if we take, for example, this bullish candle, guys, is it okay to use this color, or do you prefer the yellow? Whatever it's easier for you to see on the chart. If you have any preference, just please type it down. Okay. Now, if we take, for example, this is on 1 hour time frame. All right. And if we take, for example, this candle here, yellow, it's good. Okay. Blue, yellow. Okay, maybe I will change it to green. I'm joking. Okay, I will use both blue and yellow. Now, each candle here, all right, represents the total number of contracts that they've been traded during that specific amount of time. So if we are viewing on 1 hour chart and we see any candle in this 1 hour chart, as most of you know that this represents the body of the candle, it means, or for a bearish candle, it's this one here. What does this mean? It means that in 1 hour, let's say from 8 a.m. to 9 a.m., the total number of contracts they've been exchanged, they are represented by this visual candle here. All right. So if we are looking a monthly chart, each candle will represent the total contracts they've been traded during that specific month. If this chart was 1 minute chart, it means that each candle represents the activity that took place on that 1 minute time frame. All right. Is that clear to everyone? Are you guys with me? Okay, great. Let's flip it to the blue color now. Okay, Sunil. Now, let's say someone is observing this time frame, which is the 1 hour time frame. As we can see here, we have a series of higher highs and higher lows, higher high, higher low, higher high. So someone can say that we are seeing an uptrend taking place here. All right. In an uptrend, we usually use the pullbacks, either back to the EMAs, either back to a support zone, either back to a trend line, whatever each trader has in their trading strategy to use, or in between the moving averages. So, or some Fibonacci levels if you are using Fibonacci retracement. So anyhow, around this level here, this area here, many traders are looking to buy this Euro USD pair. Now, when it comes to what we say, the higher time frame correlation, it's a good filter to just go and check what we are about to execute, if that makes sense in the content of the overall market picture. Because guys, these are really, really, really important, and it's crucial in trading. If you get it well, if you understand it very, very good, it's gonna increases the probabilities of experience better quality trades, more winning trades than losses, because you're gonna use your higher time frames as filters. All right. Now, let's say I don't go to look at the 4-hour chart or on the daily chart, and I just judge from this nice bullish engulfing pattern here, right on the EMAs, right on some Fibonacci retracement from here to there. It's about the 50%. This intraday support from this bullish engulfing here. So there are many confluences to support the fact that, okay, I can buy this pair. All right. Now, if we go to the next slide, we're going to see something a bit different. Again, let's go to the 1-hour chart we just explained. Now let's just go one time frame higher than the 1 hour, which is the 4-hour chart. What do we see here in the 4-hour chart? We see that we are in an impulse move. All right, and this is a supportive factor to confirm that, okay, I can buy this. And that's okay. There is only one important question. Where am I standing on this market? Am I right at the beginning of this move here on the 4-hour chart? Or am I maybe at the end of this move on the 4-hour chart? I repeat again, am I buying this pullback and my higher time frame is showing that it's a good entry point, or am I at the end? And yes, Janos. Yes, Janos says here, probably the end. And that's right, because if you go to the 4-hour chart, you can see that you are already in the extension. You are already in the impulse move. The market is already moving higher. And this pullback here, it's a minor pullback on the 4-hour chart. So if you were about to buy right here with this question, let's have a look at the 4-hour chart to see what information relieves. We will raise a, let's say, an orange flag. I'm not going to say a red flag because maybe this market, it's in a very strong upward move. So yeah, we can buy, keeping our risk management rule in a place, okay? And I'm going to come back to the risk management rule based on this example. Now, what if I check the daily chart? Maybe it's going to enlighten my decision here. If you see the daily chart, surprisingly or not, you will understand that this move here and this move here is nothing more than a retracement on the daily chart of an overall downtrend. I repeat that again. The daily chart, it's in a downtrend, a clear downtrend. The daily chart is, when we go to the chart, we can see this example because it was a recent example just a month ago where the Euro USD was massively selling off, coming to a correction pattern here. And here we had a nice resistance area on the daily and weekly chart, resistance, strong resistance level, where the market is about to sell off if we had a confirmation, okay? So what do we see from the daily chart? If we first watch the daily chart and then we're going to use the hourly chart for execution, we will see that on a horizontal resistance area of the daily chart, I'm better looking for selling opportunities instead of buying opportunities to break through a level. Are you guys with me? Do you understand what I just explained here? Okay, that's great. Because guys, an uptrend in a lower time frame, many times it's just the end of a higher time frame dominant downtrend, and vice versa. A downtrend in a lower time frame, at many times, it's the end of a higher time frame's uptrend at the resistance, at the support level. Okay, so it's always recommended to have a look at the higher time frame in terms of the overall market picture, the overall market structure, and of course, I pay attention as well to a price action, okay? We're gonna make more examples and you will understand it. I'm sure after the end of this webinar, you're gonna get it very, very well, okay? And it's gonna positively impact your trading activity. Now, let's go to another example. Do you guys have any question based on this example? Is that clear to you? Should I go to the next example? Okay, I'm fine, thanks, perfect. All right, so now This is another example, guys, from the EuroCat on the 9th of 2022. You can also check it on your trading platform. Now I'm going to start from the higher time frame analysis. Okay. On the higher time frame, it's always good to watch the overall market direction. Okay, and B, if we have a price action which we can use it to weigh our trading decision. So in this example here, we can see that EuroCat is trending lower. At some point, this massive pin bar is showing the end of this impulse move. We don't know if that pin bar is going to result of the beginning of a new trend. It's possible, but the only thing we need for sure is that this pin bar indicates most likely the end of this impulse move. So what can we do here? When we see this pin bar on the daily chart, we can drop down to the lower time frames and wait for our pattern to appear or the market structure to appear, and then to start taking trades, because we have the wave of the daily chart showing beginning of maybe a counter trend, which it's going to be a trend, uptrend on the lower time frame. So if you flip to the 4-hour chart, which is the middle one, this is the pin bar from the daily chart. And what we can see here, we see the market going up, making a higher high and moving down. So it's the formation of this candle here. Some traders I know, some people I know really well, they are waiting for this first retracement, and they know that they are in a counter trade trend of the daily chart. So they have their risk management in place. So they are using less lots, smaller position size to trade this type of trade. And they execute, okay, but with a little bit of expectation. You don't take this type of trades and you are expecting to go 5-1 or whatever, it's a magical number, all right? We stay disciplined with these trades. Some other traders like myself, okay, I prefer to acknowledge that this is in a counter trend, and I'm waiting for the price to come on a daily or weekly area of resistance, and then I'm going to start looking to enter from higher here and go all the way down to keep the trade all the way down and make a nice decent profit on the trade. Okay, so let's see how it can place here. If you flip to the 1-hour chart, which is this chart here, you can see that this pin bar, I took it from low here, this pin bar, it helps you make higher highs, higher lows along the way. Nice higher high here, double bottom here. Very nice entry for people they are trading the 1-hour chart. Again, acknowledge the fact that you are on a counter trend trade of a higher time frame. Yeah, so you make nice profits along the way, but everything comes to an end. When you see that the 1-hour chart, it's coming towards a strong horizontal resistance area or a moving average area of the daily chart. You have to respect that in trading and understand that maybe this is going to cause a reversal in the market because the dominant force is down. We are just capitalizing on this move all the way up. It's nothing wrong with that. You can absolutely do it if that's your trading style, or from today, if you learn that just today, you can implement that in your trading. However, the most important thing of this example is to go right here on the 1 hour time frame. Many traders, they will see a nice uptrend, assuming that they don't watch the 4 hour, especially the 1 hour. Especially the daily chart. Assuming a trader is not paying any attention to this daily, is not paying any attention to the 4 hour. And it's coming here to the 1 hour chart. And what do you see here? You see an impulse move, a big impulse move, and a pullback. And you see here a bullish engulfing candle. Sorry, that's not a bullish engulfing candle. I'm talking about this small candle here. I cannot zoom in on that one because it's a PDF slide, but I will try to do my best and show you this one here. This green candle here, guys. This one here. Not the big engulfing, but this one here. It only engulfs the body. It's just a small engulfing part. So someone can put their entry here, put their stop here, and they can open this trade expecting to see another impulse move. However, if that trader knew that this level here, it's not only a swing and a higher high in the 1 hour chart, but it's also a resistance level of a daily chart, will be very cautious to keep a trade open beyond and expect to see the price move beyond that level because it's a very low probability. Usually, if you get yourself in this trade, most likely you have to exit here or at least take most of the profits and put a break, even stop on your position. Okay. Now, what do we see here? That the market is pushing back, and many people, they're gonna be on the sideline and wait for a nice price action in this area, or they can just blindly buy in this area, waiting for a new move to target this resistance here. However, if you go down to the 4 hour chart, which is very clear on this example, sometimes the 4 hour chart, it's going to be clearer than the daily chart, or the daily chart, it's going to be clearer than the 4 hour chart. So it doesn't take anything from our time, just 20 seconds or 30 seconds, just to have a look of the big picture in the market. The 4 hour chart, though, it shows that the buyers, they try to come in, like we see them here, and immediately the seller stepped in and reversed 100% of this move here. 100% of this move here has been reversed in only 1 hour. That's a good indication that a selling pressure is in the market. The 4 hour chart, it's putting this bearish outside bar for those who are studying candles, or a big tail or a big pin bar with a bearish closing as well. A double top on the 1 hour chart, it's not just a pullback, this one now, it's a double top. And this is a big indication that maybe we're going to see the continuation of the daily chart, because the daily chart, guys, it's on a clear downtrend. It's a good area on the daily chart that professional traders are looking to sell. And amateurs, they're going to obviously look to buy because they don't pay attention to the higher time frame. So the importance of higher time frame, it's very big. It's really, really, really good to keep our eye on the higher time frame. At least as just a market filter. If you don't trade the daily charts or the 4-hour charts, it's very, very good, and it's recommended based on my experience to keep an eye on them. All right, because many times it's going to save you from trades you maybe don't want to take them, okay? Or maybe your intention wasn't to take this trade. Now, so far, guys, should we go to the MT5 and show some recent example, or do you guys want to give me a pair, something you are trading currently, or if you have any question on any pair, we can analyze the higher time frame together if you want. Okay, you hit me with so many. Euro USD, I will leave the Euro USD because it was an example we've done. Euro USD, oh my God. Okay, let's go to Euro USD. Let's go Euro USD. Guys, I hope you start using the Admiral Supreme Edition, because really it makes it very, very easy for a trader, okay, to go through the pairs. I've done a webinar exclusively explaining the Supreme Edition. It's on our YouTube channel. If you haven't watched it, I recommend you to go and watch it. It's going to save you a lot of time and effort and energy when you use that, okay, instead of just the standard market watch. Just to make sure, is everyone looking my screen here? Can you see the drawing? Can you please type yes? Yes, okay, awesome. So let's have a look at the Euro USD. Now, Euro USD. Last webinar I made, we were here. I don't know was it anyone on the webinar I've done last time, and I was showing guys this example with a pin bar here, and I told you how I trade this pin bar, and we were around here on the support. Was any one of you on that webinar? Do you recall? I assume no, that's fine. That's totally understanding. So on the Euro USD, right now, we are sitting on a clear support zone, right? That's a support zone. So the overall market, it's in a downtrend. We can see from the higher highs and higher lows here. Sorry, from the lower highs and lower lows here. I apologize. And right now, we saw the market try to move back to this area of broken support, which now became resistant. That's okay, Zach, that's okay, Dorian. If you missed it, that's completely fine. Okay, and let me zoom it down. Maybe it's going to be easier for you. We go wave to back. No, we go wave to back. That's fine. So on this area here, when the market it start going sideways, honestly, it's not the ideal place to be on the trade. And why is that? Let me give you the example. If we drop down to the 1 hour chart, you guys see how messy is this one here. I'll just zoom in and show you that on the lower time frames, when the daily chart, it's consolidating in a very, very small, in between a small boundaries like this one here. So the daily chart, it's consolidating between this area. It's not an ideal way to go on the lower time frames and trying to capitalize on this move. Why? Because with only one candle, we see either a spike or a full close, and there we are at the resistance level. Another candle down, there we are on the support level. We don't have room to make a good trade out of that. So if you are just trading on the 1 hour time frame, sorry I mentioned the 1 hour, guys, it's just purely because it's a time frame. I believe that everyone is familiar with that. I don't want to go to this webinar to a 5-minute chart. I prefer to stick here because it's easier for you to see the picture and it's less confusing from daily to 1 hour. Okay, if someone wants, or if all of you are trading in even lower time frames, I'm more happy to do a webinar explaining, going to a more deep analysis on that. Now, if we take this example here, you see the daily chart, it was the daily chart we mentioned, it was the boundaries from here to there. Let's say you acknowledge that we have this support down here, and then the market reaches this resistance, and then it's pulling down. So let's forget this part, because now we have a defined areas of resistance and a defined areas of support. So starting from the 5th of May till today, we're going to try to get advantage of this move. All right. Let's zoom in a little bit more. Let's put our lines here. All right. So 5th of May, it's somewhere, let's say we start from here. No, that was a define. That's our support. We start from here. Okay. So the market is coming here and making a double bottom at this level. Okay, you see, it tried to break through. The buyers, they stepped in, they put this bullish engulfing candle, so the market didn't sell off and it's trying to move higher. Now, when the market, guys, is going on this type of consolidation in a very, very small boundary, it doesn't produce successfully trends. It goes sideways to reach the other side of the boundary, to reach on this occasion, most likely the higher, the upper level, it's going to reach by a sideways move, if it's going to end up be reached. All right, nobody knows. What we can see here is that after this bullish engulfing, the market moved higher. It pulled back like in a normal occasion up to this last swing high. And because the higher time frame is not clear in the trend, it's in just a sideways move. When it reached this retest area, it spiked with this candle here and it pulled back immediately. It's a random nonsense move here, guys. Everyone can see it, right? You can understand this. Then the market, it pulled back almost to the same area that it tried to sell off before. And then the buyers stepped in to rescue it. Again here, the market didn't sell off. Buyers, they stepped in and it's pushing back. And you can see that this is a very, very, very random and, in my opinion, not tradable move. It's not a higher probability move to trade. And that's because on the higher time frame, we do not have a clear trend anymore. The market stopped trending. Where in this occasion here, where I told you the last time, if I move the vertical line and we go to the 1 hour here, for example, what do we have here? I will just hide it so you can see the power of the higher time frame. So many traders many traders who are not paying attention, guys, to the higher time frame, they always get in that trap. And sometimes even when I'm doing some coaching and I see, and people, they tell me, Theo, I see this big impulse move. I'm waiting for this pullback. I enter here on the inside bar and I have a losing trade. And then I'm waiting the market to come here, which it's coming here. I see this pin bar here. I enter, bam, in a losing trade. And this happened over and over and over again. But if you go to the higher time frames, as we saw on the 1 hour, this move here, it's the daily chart was moving down, and then it was this upper move to the EMA, which it's been rejected with a nice pin bar. Okay. How could you trade it on the lower time frame? This, you could just come on the 1 hour, for example, and you can wait to see a new cyclicity in the market, a new cycle in the market. That's where the pin bar move. Instead of get right here, some people I know, they enter on this bearish engulfing here, and some other people, they were waiting to see, including myself, waiting to see this first lower low in the market, clear dominant from the sellers. The daily chart had a nice price action confirmation, and it has a direction confirmation, downtrend, pin bar. 1 hour time frame, it made a nice cyclicity. Wait here, nice bearish engulfing, boom, there you go. You let the trade play it off. Okay, with a small stop loss, a tiny stop loss, nice 2-to-1, 3-to-1 risk reward ratio. And that's how I call it the price action trading. Okay. It was an occasion here for the Asia. That was an opportunity for the people in Australia and in Asia, which they could take this trade here in a line with a daily chart. Okay, again, a new fresh lower low, a nice pullback here in between the moving averages, this bearish engulfing pattern here, entry, your stop, you risk this to make this. That was a support zone, which we said we are out of the trade. So that was a very nice and sweet trade. But if someone wasn't paying attention constantly to the higher time frames, they couldn't acknowledge that that change of direction and the new lower low on the 1 hour chart, it was the best entry because the daily was in a clear downtrend and the daily showed a good indication that, hey, now I'm resuming the trend. Okay, so if you start implement this way in your trading, you highly increases your probabilities to not only get a better understanding of the market and where the money are flowing in the market, but also you're going to experience more winning than losing trades, hopefully. Okay. Again, that's, again, guys, 100% winning trade, it will never happen, at least based on my experience in more than 10 years of trading. But to get into the trades which you can have high reward based on the risk ratio, it's gonna massively positively impact your account. Okay, guys, is this example understandable from every one of you on this call? Really, I want to hear if you understanding, if that makes sense to you, if it's something that you can see yourself resonating with this. So in the future, from today, you can start using this approach, whichever is your trading entry, whichever is your trading methodology. Maybe you are trading off the moving average, maybe not. Maybe you are trading on support resistance, Fibonacci, anything. By knowing what the higher time frame shows you, it will definitely help you in your trading. I will make an example because it just jumped out of my eyes and I cannot bypass this example, sorry. Okay, and I will leave you with this. So let's stay on this pair. And do you understand that if we zoom out a little bit, the overall direction of this market is down? Do you guys understanding? Let's do this very quickly. Is everyone understand? Okay, perfect. Now, if I zoom a little bit in, and let's say that we are here. Okay. I come and I draw my support area. It's just stand out of my eyes that this swing low, it's a support, a recent support in the market. Now the price approaches this area here. All right. Of course, from the price to approach this area, it has to move higher from this lower point. So someone here is looking on the lower time frame, this move here. A trader can explain this move as a trend with higher highs and higher lows. Let's go to have a look at the 1 hour. Where is it? It's here. Yeah, so a trader see this move, let's change the color, see this move here as a series of higher highs and higher lows. Okay, now, I know traders that they enter here. I know traders, they enter on this bullish engulfing bar. Okay, I was sitting on the sidelines and I was waiting for the market to break this structure of a higher highs here. I had this as my reference swing point in the market. And once the price broke below the swing point and closed in multiple 1 hour candles, I was sitting and waiting for a bearish confirmation. That bearish engulfing candle here, it was good enough for me to just enter short. Okay, I'm not saying that this, I'm not saying this example to show you that this was a winning trade. No, I'm showing this example to give you, to take your imagination and put it in the right place and where you have to pay attention in the chart. The daily chart shows that is ready to resume its downtrend with that price action. It put that bearish engulfing on the chart. The 1 hour chart clearly showed change in the market structure. So it was a good enough reason to enter short from here. If someone missed it, can wait for, I don't know if for you this was a good entry point. For me, it wasn't, because it didn't pull back nicely. It just made a shallow pullback, and that's very normal in a strong trend. But this one here at the early European session, this bullish engulfing, and I think it was at around 8 a.m. or 9 a.m. this one here. Yeah, it was 9 a.m. it confirmed. So in the completion of the 9 a.m. candle here, if you could enter here and you have your stop above, you could make a nice 2-3-1, 2-1, 3-1, however you play your trades around. Okay, why that was an exceptional exceptional trade? Because the daily chart was in a clear downtrend. The daily chart shows that it's going to resume its downtrend by that bearish engulfing candle printed. And then we used a day later, a day after, we used the 1 hour chart to enter with the direction of the daily chart. So this is a textbook example. And guys, this happens over and over and over and over and over again. Okay, you can use the 1 hour or the 4 hour chart as your guide time frame to enter on the 15-minute, on the 5-minute chart. However, there you're gonna take trades more often, so that also you're gonna experience more often winning trades, more often losing trades, which the hourly charts, yes, they take a little bit longer to play it off. But from my experience, it gives the trader, especially the beginner trader, it gives them a better understanding and more time to think how they want to manage their trades. Okay. So that's all for me from now, ladies and gentlemen. Guys, really thank you for Theo. When it's 5 or 15 minutes to 1 hour, do you watch daily? Yes, absolutely, Dorian. Dorian is asking, Theo, when you use 5 or 15-minute chart to 1 hour, do you watch the daily as well? Yes, I watch the daily because I want to see the direction of the market, the overall direction, and if there is a price action against. And again, in 30 seconds, if we go to the daily, for example, let me just clean a little bit here. Okay, so for example, if you see Dorian, this move down, and then you come here and you see this bullish, we can say inside, not inside, but let's say it's an inside part. Someone expect that the day after we can see a bullish movement. Yes, if you are trading on 5 minutes, on 15 minutes, you can use this as a guideline and say, okay, I have more confidence to go and take counter trade trend against the trend of the daily chart. So I can start looking for long positions on the 5 minutes or the 15-minute chart. But I recommend you to be more careful on the amount you risk on these trades. If you are trading, if you see this or this bearish engulfing or this pin bar on the daily, and then the next day you go on the 5 minutes, on the 15-minute chart, go all over. Okay, use your normal size position. You can leave your trades for a bit longer. you can go for higher reward to risk ratio because you have the daily chart in a line with also direction and price action. All right. Guys, if you want to watch again this webinar, feel free. We're going to upload it later on the YouTube channel. All right. If you need anything, you can send us an email. You can use your portal on the Admiral. And I hope this add value in your trading. Thank you so much, Dorian. I appreciate all of you guys the time you took to invest that 1 hour of your valuable time watching this webinar. We are here anytime you need to help you improve your knowledge, your skills, your chart reading, everything. Okay, I hope I'm going to host another webinars in 2 weeks for another very, very, very interesting topic. You're going to receive email. I wish you happy trading and I wish you good nights. Thank you so much, guys. Bye-bye.